Yields are ripping higher again, and this time it's political. A Republican-led spending bill has the bond market reacting in a big way. Plus, what's going on with meme stocks like GameStop, AMC, and where does Tesla stand in all this? We'll break it all down in today's market check-in and also look ahead at the key economic events that remain this week. If you're into real-time market moves and macro insights, make sure to hit that like button and subscribe and follow wherever you listen to podcasts. Now, let's dive in. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Happy Wednesday, everyone. It is May 21st. We are back for a midweek check-in, and boy, oh boy, did we have an eventful day. So let's hop right in and do a market recap. So we had 5, maybe 6 days in a row green, closing in on what seems to be a new all-time high. I believe we're about 3% off of a new all-time high, which is pretty wild. And we took a pause in a big way from that today. So as you can see here from the heat map, for those watching on YouTube, a lot of red across the board except for Google. Overall, big red day in the S&P 500. Let's take a quick check-in on SPX, the S&P 500 index. And as you can tell here, we were not able to hold the 5,900 level. We closed today at 58.44. So pretty big red day, down well over 1.5%, 1.61%. So not a great day on the market. We were kind of due for a pullback anyways, but we did have some events that happened, some news headlines that came out that really impacted this, and we'll dive into that. Quick check-in on tech via the NASDAQ 100. This was also down today, currently sitting at 2180. And again, same with the NASDAQ. We had an insane run really over the past week. We had a massive gap up and a lot of higher lows, lower highs, or what am I saying? Higher highs and lower lows. I'm tired. And today we definitely took a breather on that, but for the S&P 500 and also for the NASDAQ, the key thing to remember right now from a bullish standpoint, you basically just need to zoom out. We are above the 50-day moving average and the 200-day moving average, and we are closer to a new all-time high than, we are to the April lows. So that is a good thing, but definitely a big red day. All of the sectors in the S&P were negative today. Let's do a quick check-in on the VIX. Remember, this is the fear gauge for the market. When the VIX is above 20, there's a lot of uncertainty. When the VIX is below 20, there's stability in the markets. And we had a period of time that coincides, of course, with the rise in the stock market over the past week, where basically the VIX was below 20, but today we shot above it. The VIX was up today 15.37%, pretty big day on the VIX, and we closed at 20.87 on the VIX. So kind of makes sense. I think the VIX was due for a bounce. It looks like it found some support down here around 17, and so it kind of makes sense that we shot up today. But you might be asking, Brandon, why did we shoot up today on the VIX? Why is the market red? Well, I can answer that for you. According to CNBC, Dow slides more than 800 points as spiking Treasury yields and deficit fears spur a sell-off. So basically today, Treasury yields went pretty high. We had a bond auction, and look, I'm not a bond expert, but basically all you need to know is that the bond auction today did not do great. And so because of that, we saw Treasury yields go up, and it affected the stock market negatively. So according to CNBC, stocks sold off on Wednesday, pressured by a sharp spike higher in Treasury yields as traders grew worried that a new U.S. budget bill would put even more stress on the country's already large deficit. The Dow Jones lost over 800, The S&P 500 shed 1.61%. The NASDAQ slid 1.41%. The 30-year Treasury bond yield last traded around 5.09%, touching the highest level going back to October 2023. That's not great. The benchmark 10-year Treasury note yield traded at 4.59%. So basically, yields push stocks down today, which isn't great. And, there's some other things going on here as well. The Republican spending bill is part of the reason why yields are going higher. So again, according to CNBC, the Republican spending bill is sending yields soaring and creating a major market headache. The U.S. debt and deficit situation is bad and facing real prospects of getting worse. Whether the recoil in financial markets continues is largely in the hands of policy makers. So right now, we are all waiting to see what's going to happen with the big, beautiful tax bill, as Trump calls it. And, there's a lot of uncertainty from a fiscal policy standpoint right now, and it's affecting the bond market, basically. So the U.S. debt and deficit situation is bad, facing real prospects of getting worse, triggering a high-profile credit rating downgrade from Moody's, which we covered, and another selling stampede in stocks and bonds. So not a great situation. We need to figure out what's going on with this bill, and it's causing yields to jump higher. And, right now, everyone in the market is kind of waiting to see what's going to happen with this. I know President Trump wanted to get this deal done on the tax bill today. And at this point, it doesn't seem like it's going to happen. We have some people holding out. So that's kind of where we're at right now with it. Stocks are under pressure due to that. The 30 bond yield, topping 5% is not a good thing. It's not good for stocks, and it's making stocks, less attractive right now. So that's kind of where we're at right now. Not to mention the fact that trade tensions between the U.S. And China, it's not helping. Right here, according to this article, add to that trade tensions, the U.S. has initiated with Japan and China the largest and third largest foreign holders of Treasury debt, and it makes for a market headache. So, you got a whole pile of crap right now between the trade war and the tax bill, not to mention the U.S. Debt is so freaking high that, it's not great. The U.S. is likely to add to its $36.2 trillion debt load. That's massive, of which $28.9 trillion is directly held by the public. Tax cuts that aren't matched with less spending would also pressure the budget deficit, which is heading towards 7% of gross domestic product. And so let's do a quick check-in here on yields and where they stand right now for bonds. So one thing that is interesting to note, right now you have the 2-year sitting at 4.022%. You got the 10-year sitting at 4.59%. The 30-year, as I said, above 5%, and the 20-year, 5.11%. So this is interesting to me and something I've been kind of learning more about. I am by no means a bond expert, but this is considered, what's the term? It's a bond yield inversion, I guess you could say. I hope I got that right. But basically, you want to see the 30-year yield higher than the 20-year. And right now, the 20 is higher than the 30. So that's not great. There's a lot of reasons that could happen. But basically, I asked our good friend ChatGPT, basically, hey, what's going on with these bond yields and why are stocks reacting negatively to it? Because as far as I knew, typically yields move with stocks, right? So basically when bonds go down, stocks go up and yields go up, right? But right now we have yields going up and stocks going down. So what gives? So according to our friend ChatGPT, yields rising due to growth optimism. So that there's a key distinction here. When yields rise because investors expect stronger economic growth, stocks often rally alongside. The reason for that, higher growth means stronger corporate earnings, right? This is often the case when inflation is under control and rate hikes aren't a major concern. So what this is saying is yields are going to go up in a steady form, right? When there's expectations of stronger economic growth, which means that corporate earnings are going to be higher, which means people want to be involved in stocks. Now, the distinction is between yields rising due to growth optimism and yields rising due to inflation/rate fears. So when yields rise because of persistent inflation or expectations of more Fed rate hikes, stocks tend to fall. So higher yields mean higher discount rates, lower present value of future earnings, hurts growth stocks especially, tighter financial conditions, so weaker corporate profits and consumer spending, more attractive alternatives to stocks. Bonds become more appealing, and there's something else that becomes more appealing, which I'll get into later. But basically, what we're looking at right now is a lot of uncertainty, and so yields are going higher because of that, and it's making the stock market less attractive. So yields are rising because of sticky inflation, according to ChatGPT, which honestly, I don't know how accurate that is. I mean, some of the hard data we've been getting on inflation has looked decent so far, but I think the tariff uncertainty adds to the uncertainty of inflation. So you got that going on. You got Fed potentially delaying rate cuts or even staying higher for longer, which we know. It doesn't really seem like we're going to get a rate cut at the earliest until September now, and majority of them probably won't even come until 2026. That's pressuring growth in tech stocks as we looked at IWM, the small caps, they're getting hurt there. Risk sentiment broadly. So higher yields equals tighter liquidity. So right now, stocks are not enjoying this higher move in yields. And the fact that we had an auction today that didn't do that great also didn't help anything. So hopefully we can get some stability in the stock market. Maybe this is just going to be a temporary blip and we'll continue higher and hit new all-time high. But as of right now, the market is definitely not liking what it's seeing out of the bond market. And keep in mind, the bond market is massive. I think I read somewhere that it is at least 2 times, maybe 3 times larger than the stock market. It's huge. So the fact that these auctions are not doing that great and yields are going higher is putting a lot of pressure on equities, as we can clearly see here from the S&P 500. So, but not everything is down right now. Talking about safe havens, how about Bitcoin, folks? Bitcoin jumps to new all-time highs, surpassing prior record from January. Bitcoin rose to a new all-time high on Wednesday, breaking its January record. The price of the flagship cryptocurrency was last higher by 2% at 108,955.10 cents. According to CoinMetrics, earlier rose as high as 109,500. That is insane. At one point, Bitcoin had erased its gains after Treasury yields spiked and stocks fell to session lows. So Bitcoin, as of right now, is looking pretty nice. If you're looking for a safe haven, I am not personally involved in Bitcoin. I wish I was. I wish I would have bought it 5-10 years ago. But alas, here we are. So, but if you look at the chart for it right now, I mean, we've had this rip since the end of April, from lows of right around 76,000 to a new all-time high today, right around 109,000. Bitcoin for the day right now is up 1.38% and looking pretty great. I'll be curious to see if we can crack 110. And then, I would be looking at 120 just as far as psychological levels go. But I did read somewhere that there are a lot of institutional bets on futures for Bitcoin. And so as long as that inflow keeps coming in, I guess it would make sense that this continues higher. So let's check in on some of our favorite meme coins. Well, not coins, stocks, I should say. First of all, let's take a look at GameStop. And to be honest, I did, I cracked and I took a position on this, obviously, before we had the sell-off today. So that was unfortunate. But, GameStop, folks, if you look at it since beginning of April, it's been looking fairly bullish. We are above the 50 and the 200-day moving average, and we got a cross of the 50 above the 200-day which is technically called the golden cross. It's a pretty bullish indicator, and really that's, I guess, my main argument from a technical standpoint for GameStop. Not to mention the fact that if we look at GameStop when it comes to short interest, as I'm sure most of you know from, just the fiasco that GameStop has been really since 2020 and 2021, it does have a high short interest, meaning people that are betting against it, right? People that are expecting this, stock to go down. And so, when they bet against it and it goes up, they get screwed, they feel pressure, they have to cover their short shares, and it just adds to, it's more fuel on the fire, right, for the bullish argument. So as of right now, let's just take a look. According to Fintel, GameStop short interest currently sitting just above 48 million shares short, with a short interest ratio of 6.56 days to cover, fairly high. Short interest percentage of float, meaning how much of the total shares available to trade for GameStop are currently sold short, and that number, according to Fintel, is 11.93%, which is fairly high. Anything above 10% is high. So GameStop, I like it. I like it in the long run. I bought some calls on this that expire in 5 months, I think. I believe I bought expirations in October. So I have plenty of time on this, so I don't need anything to, happen tomorrow. But I do think it is setting up nicely, and I think the fact that they are so invested in Bitcoin, and Bitcoin just hit a new all-time high, also helps the case for the company as well. And keep in mind, GameStop sits on a lot of cash, folks. So I am watching this. I'm riding the meme wave. Now, with that in mind, I do have a plan to get out. I'm using, responsible risk management. We're not going to YOLO or anything like that, but I do like the setup for a longer swing. Let's take a look at AMC, which is another position I have. Now, this one, the case is not as strong from a technical standpoint. It isn't above the 200-day, but it did get above the 50-day moving average last week, which is bullish. And it hadn't been above that since almost half a year ago, since November. So it's been trending down, and we did get a technical breakout last week above that 50-day. As of right now, if we look at AMC, it is hovering around that $3 level. So I want to see personally if it can get above, $3 first of all. I have calls on this $3 strikes that expire in June. As of right now, I don't feel too nervous about it. I mean, I have a month. I would love to have more time on it, but I bought June for whatever reason. So, we'll see what happens here. But the nice thing is we did crack all the way up to 319 on this last week. I believe that was Thursday. So, I want to see, or no, that was Friday. So Friday is when it had that break above 3, hit highs of 319, and is hovering around that level right now. We did get a crack above 3 to 304 briefly this morning before, of course, yields went higher. The auction didn't go well in the bond market and stock sold off. So obviously it felt pressure from that, but I do like the setup right now. And, I'm looking to see if we can, get above 3 and hold above 3. And then from there, I would be looking to see if we can touch maybe $4, $3.50 and 4, I would say, are some psychological levels where you're going to have a lot of notable interest. One thing I'll also point out here, and then I'll move on. If we look at the put to call ratio on AMC, even on a day like today where the stock market sold off, it is still at 0.15. I mean, we had almost 70,000 calls in volume today that were bought versus 10,000 puts. Bullish action in the options chain. I definitely like to see that. And that's what I'll be looking at. $4 looks like resistance, and that would be above the 200-day as well. So we'll see. We'll see if we can get some movement there. And then lastly, I want to check in on Tesla. So Tesla has also been a stock that has been high flying with the market over the past month or so. We are above the 50 and the 200, which is great. Obviously a red day along with the market today. This is a big holding in the S&P 500, so that makes sense. But this stock, it's wild. It's a high beta stock, meaning relative to what the market does, it's like 5x that. I think it has a beta of 5. So, if the market goes up 1%, hypothetically, Tesla's going up 5%, and vice versa, right? So Tesla is a very volatile stock, and it also has quite a bit of short interest, and I've been seeing a lot of bullish bets on this as well in the options chain. The put to call ratio for Tesla today, 0.56, which is bullish. We had 1.2 million calls versus 737,000 puts. So bullish action again in the options chain, which is, it's a good thing to use, the options chain, that is, when you're looking at stocks, when you're trying to figure out, hey, this looks bullish. It's a good idea to check that options chain and see if you can confirm your thesis in the options chain, right? Is there bullish momentum? Is there bearish momentum, right? Those are things that can all add to the confluence of your trade plan. So these are some of the stocks that I would be paying attention to. I don't have a position in Tesla, but definitely AMC, GameStop, definitely have them on your radar. I'm not telling you to buy. I'm not telling you to sell. I'm not giving you a trading plan or anything like that. I'm not promising anything's going to happen. I just simply want to put these stocks on your radar because people are talking about them and there's a lot of eyes on it. So that's what I got for the check-in on the meme coins. And I don't know why I keep calling them coins. They're not coins. I'm stuck on Bitcoin over here. The meme stocks, rather, and also on Tesla. Tesla isn't really a meme stock. It's more established. We'll give it some credit. Lastly, let's take a look at the economic calendar, see what we got left this week. Thursday, which is tomorrow, May 22nd, we get initial jobless claims, 8:30. We get manufacturing PMI at 9:45, which is going to be big. Services PMI, 9:45 as well. That's big. Existing home sales come out at 10. And those are the big events that are happening tomorrow. We do get a couple more bond auctions tomorrow, but small ones, nothing too crazy. 4-week bill auction, 8-week bill auction. Those come out tomorrow as well. And then Friday, to wrap up the week, we get new home sales at 10 a.m. And that's about it. So that's what we got left on the economic calendar for the remainder of the week. As a reminder, the market will be closed on Monday. For Memorial Day, we will have a shortened trading week next week, Tuesday through Friday. So keep that in mind if you are a degen, as I like to be sometimes, and playing, some day trades or short-term swing trades. Keep in mind that the market will not be open on Monday. What we got coming up next. So if you haven't checked it out already, the Intelligent Investor mini investing series that I've been putting together, we got part 1, 2, and 3 out already. Part 4 will be coming out on Saturday, where I will show you, using Benjamin Graham's formula updated for 2025, how I look practically for investments using his criteria. If you haven't read The Intelligent Investor and you're interested in long-term investing, I highly recommend it. It is the foundation for Warren Buffett when it comes to investing. I don't know if you've heard of him, but he's only the greatest investor of all time, in my opinion. So definitely make sure you subscribe, pay attention, get that notification. That'll be coming out on Saturday. And then Sunday, I will do a market recap as always for the week as a whole. Let's see how we can finish up Thursday and Friday. And then let's see what we got heading into a shortened trading week as we look to wrap up the month of May. Let's see if we can turn this puppy around on the S&P 500 and see if we can close in on a new all-time high. Thanks as always for watching. Drop a comment. Let me know what you think of GameStop AMC. Do you think I'm silly? Do you think it's gonna moon? I want to hear what you think. I'll be back this weekend. And folks, remember, plan the trade and trade the plan. Have a good night.